Hello everyone and welcome to my daily report market analysis videos on Monday the 9th of December with me, Richard Perry, market analyst at Hantec. We've got a relatively risk negative reaction on markets today, dollar negative, risk negative. We saw a huge move up or big gains for the dollar on reaction to the payrolls report, but then into the close it just slipped away, and that sort of came as sort of comments from Larry Kudlow, the US economic advisor to the White House, suggested on Friday that these tariffs that are penciled in for the 15th of December are still on the table and still likely to come in were there not to be any traction. So we've seen subsequently a little bit of a move back on risk appetite that has helped sort of drag equity markets a little bit back today. You've seen US futures lower. And it's interesting because also what we've seen overnight has been the Chinese trade data, which exports fell again for the fourth consecutive months and missed estimates, and it sort of reflects the impact that the trade dispute is having on Chinese trade. And subsequently we've seen Chinese yuan weakness, so that's picking up on the dollar yuan rate from 702 to 703.5, further above 7, which seems to be a bit of a benchmark seen as that from the market. But what we've got is volatility again sort of picking up today on equities, and again that sort of plays into this whole equity market slip back today. We've got treasury yields falling back on the 10-year and the 2-year. You've got the yen, which is a little strengthening again. Gold finding a bit of support as well. You've got the Aussie and the Kiwi both lower and underperforming broader across the forex majors. So pretty cautious looks to market moves today. Nothing too decisive though. We've got the Fed on Wednesday, and we've got, as I said, this decision that Trump's administration is going to have to take on the next potential moves on tariffs the next weekend. So we have seen today this move playing out through markets, bit of caution, but nothing too decisive yet. In terms of data points today, not a huge amount, I have to say. One I've seen is the Eurozone Hantec economic sentiment indicator. Sorry, investor confidence, my mistake, investor confidence indicator. And that is at 9:30, expected to dip back to 4.9 or negative in December. But yeah, I mean, to be honest, I mean, it's not an indicator that we often look at, but it's the only one I could really find out today. Now, my chart of the day is silver. Now, what we have seen is silver falling away, sharply moving lower on Friday, breaking down 1662, that old pivot line of support which had held up through November, breaking down on a closing basis on Friday. Now, you can anyone who looks at gold will know that this is not especially positive for gold, because gold and silver seem to be tracking each other in these sort of medium-term sliding trend lines with lower highs and lower lows. Negative configuration again on momentum, 50 on the RSI, falling there, below 40 now. MACD lines, look at that, so are they crossing lower? Just all suggests, as well, stochastics falling away, all suggests selling into strength, lower highs, lower lows, continuing lower, momentum indicators, also moving averages crossing over and rolling over, falling away, suggesting selling into strength on the silver. And I'll show you the gold chart in a later video, but certainly we can see that breaking down below 1664, 1662 seems to be a basis of resistance initially. Around 60 on the hourly RSI seems to be where selling phases tend to come back in, so that could be something to watch. So you've got a basis of resistance, 1662 up to 1678. Basis of resistance. So a little bit of a sell zone there now, but it certainly looks as though silver is dropping away. Next real support doesn't come in until 1588 on silver, so fairly sizable drop potential there should it take off, but it certainly looks, with the configuration of the momentum indicators, it looks as though silver is a sell into strength. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.